Morning, peoples. Look, we got ourselves a monster gap in the market again. Day number 2. Monster gaps in the market mean what? It's going to be a tricky day today. A day 2 gap. Hold on, let me get my coffee. A day 2 gap in the market is going to be more tricky. We had a 4% gap yesterday. Now a 3% gap. One thing to remember when you have gaps in the market, a 3% gap in the market means the stocks on your watch list are going to be up 10, 15% before the market even opens. The only things you can do on a gap day like today is you got to wait out the first few minutes. You can see, this is ideally what you kind of try to do, right? See yesterday, this is the TQQ, this is the NASDAQ ETF. You had the big gap up in the market. That's fine, right? We're going to get gaps, and there's nothing we can do about it, all right? We're going to get gaps in the market, but you can't chase it to opening tick. So, you got to wait it out. But when you finally take out the opening range, or when you pull back to an EMA and you hold, those are then you can start loading in some positions, all right? Then you can start loading in some positions. Now, there's 2 things to remember about the current market conditions, all right? In current market conditions, now that we're starting some rounding and some uptrending kind of action. So in a crash, stocks move together with indexes. Everything moves same percentage. So during this time, when the markets crash, everything will move around the same. That's why we just trade indexes and TVIX and junk like that, because it's all going to move around the same. When markets flatten or trend higher, there's a decoupling, meaning if your index moves, say, 2%, most stocks will still move around 2%, but if you're charting, right, you're a technical analyst, then you're going to have others. If the index moves 2%, individual stocks are going to move around 10, 15, 20%. So what happens is, when the market is crashing, you really want to focus your list. You want to focus your list and just, take a handful of large cap stocks, handful of indexes, use 3X ETFs, and you're good to go. Now the market's starting to flatten out, the volatility. See, on the volatility on the VIX, the volatility in the VIX is starting to come down every day. From 90, it's already been cut in half. So now that it's been cut in half, when the volatility decreases, now you have to do a lot more. You have to do a lot more scanning. You have to do a lot more homework, meaning it becomes a stock picker's market again, where you have to go around hunting for individual names because they're going to move a lot more than the individual market. So probably, we've been using these 3X ETFs and stuff its days probably, as the volatility decreases, it's still moving around really well, but you saw good swaths of it yesterday where it just it just grinded along all day. When the volatility decreases, they just kind of grind along. You don't get as much action in them. So then you have to start moving to individual names. So if you've been really, really dusting hard on these, ETFs, now you're going to have to find some individual names to trade. So if you look at the gapper list, so this is the gapper list. We're starting to approach earnings season, and earnings season starts with Alcoa. So we got 13 days. You got 13 days to sharpen your swords. 13 days to sharpen your swords. All right? So what do you notice about all the stocks that are gapping up today? What do you see them in common over here? The things that you see in common, these are all the names that have been beaten down the most. These are the sectors that have been hit the most. And you also have a significant number of short interest in most of these names. So you see here, short float, 14%, 20%, 23%, 46%, 20%, 16%, 30%, 30%, so on and so forth. When the markets start to rebound, you want to hunt for trades that have high short interest. They are going to be the ones that are beaten down the most because everybody was shorting them. Why? Because they're big giant turds, and so you want to be, obviously shorting those. But now, like, those are the names that have been beaten down the most, and they have everybody shorting them, so they're the ones that really like start to fly also the most. So you're seeing like a lot of airlines here. Like, I mean, there's nothing dirtier and smellier and more annoying than riding on a Spirit Airlines flight. I've done it numerous times. As an Indian person, it's just like a God-given right that, I've spent a good chunk of my life riding on Spirit Airlines flights. You see this thing dropped 80%. So it's obviously been shorted quite a bit. So you're starting to see all these kind of names like really, really start to fire. So these are the things that you want to look for when you're looking at rebounding plays in the market. What's down the most? And then what is got good short interest? So you see these are all cruise lines here, airlines here, casinos, and things associated with casinos like recreational gaming, play, which is like Dave & Buster's. It's like basically it's like a fucking casino, right? Wynn, casino, MGM, casino, and then you got a handful of retail names here. So these are the kind of names that you want to concentrate on in the next coming days if the market is truly evening out, because they're going to have the most stretch in them. So let's talk about some individual names that I'm watching today. So first of all, let me give you just a quick game plan of what I'm trying to do today. I'm not going to chase up this market at all. So a couple of these names, if I get this thing into 1550, 1540 at the open, this is going to be tricky. At the open, if I get in some of these plays into these resistance spots, I may play for a quick fade at the open. I won't marry it. Quick fade at the open for a gap fill. And then I'll start to see how the market starts to react as it pulls back. And then I'll go in for the play. Day two gaps are notorious for fading off. So you can see like this MGM. The low here was at 10, right? So now you're up here 50, you've already popped 50%. So into this resistance spot, I'll look for a potential double top. It will be a quick trade though. The markets are starting to even out, so you can't really marry shorts for more than a few minutes anymore. The ideal play for me is then, once we start pulling into the EMAs, that's when we want to start to long these things. So what do I mean by pull into the EMAs? On gap days, when the market gaps up, or like all your individual stocks gap up, and you're just left, right, holding your wiener in your hand, wondering how you're going to get into a particular name, this is how you want to do it. So like I have this CCL on my watch list for potential long, right? Big move yesterday. You got double bottom over here. They've taken care of financing. Yes, their cruise ships are still deacons of pestilence and disease and herpes and stuff, but that's besides the point. You got a double bottom here. You've got financing out of the way. So when you get a gap up, you can't just chase a gap up. So this is like ideally what you really want to do. As soon as I see a gap up in a stock, if they don't reverse back, like, right, we want to wait for a little bit of rounding. We want to wait for these moving averages to catch up. When the 9 EMA catches up, that gives us a much easier way to manage our risk, and then we can start playing them for, to the long side. And you'll see this on like pretty much like every type of stock. So like today we'll be watching NCL, LH, also Norwegian Cruise Lines, much nicer plays. For the double bottom here at 8:30, but this is ideally how you want to enter, because today they're gapping the shit up. Gapping the, is that a word? Is that a saying? I don't know. Gapping the something up. So they're gapping up a lot. All right, they're gapping up a lot. We can't do anything with this. So what we do is let it pull back. All right, let it pull back. Let it start to round at those EMAs. And now you want to enter this thing. And then you just want to be hitting these things on the dips and stuff. Don't chase anything up on strength today because you got a big gap in the market. So see this today? This is the same game plan. You've got a $2 gap up on Norwegian Cruise Lines. So it's a big gap. We can't chase that gap. You chase, you die, especially on a day two. You chase, you die. You chase, you believe in unicorns and all sorts of other fun stuff. We got to wait for a pullback. So let it start to pull back to those EMA, okay? When you see big days in the market like we had yesterday, the FOMO kicks in so hard. Trust me. I had to leave yesterday because I had so much FOMO. I was like, man, I saw everything just cruising. It was cruising and boozing. And I'm like, fuck, I missed like some big runs on these things. I had to go. Like I had no choice. I had to go. Because when that FOMO kicks in, it will. The market was the Dow up yesterday, 1,700 points. It's a lot of FOMO that can come in. And so what ends up happening, you just chase, and then you end up getting smoked out. Your small losses become bigger losses. That happens. The key is going to be, don't get the FOMO. Wait it out. If you've got a stock on your watch list, so we got Norwegian, we got RCL, we got CCL, right? So we got the 3 cruise lines. Wait for the pullbacks of the EMA. Just like yesterday. Don't chase them up. Let them gap up. Let it pull back to those EMAs, and then you try, all right? Any stock on your watch list, same type of deal. Put Boeing on your watch list. This is the same thing. This is actually your quintessential gap up play. If you want to get into a stock, when the market gaps up, your individual stocks gap up huge. Boom, you gap up. That first dip, right? That first dip, that's when you want to hit, right? Then any subsequent dips you can hit. Boeing works because Boeing is an institutional type of stock. You could go in and try to hit these things at the VWAP. That $10 range yesterday? Good Lord. Same type of deal today. You can see this thing starting to curls for the girls. You're remounting over the 20 SMA. So this is, we got cruise lines, then Boeing's number 2, right? Boeing's number 2. Oddly, Boeing doesn't have very many shorts, but it sure trades like it's got a lot. Let me see this thing. Hold on here. Hold on. Yeah, Boeing doesn't really have many. It looks like everybody's covered their shorts, but the range has been sick. So now you're at like 160, right? I'm actually down. Let me take a look at SIP. So you're at 160. Now, this is going to get a little bit more wild. All right? This is going to get a little bit more wild. So you're at 160. You can't chase this thing. You close at 150, right? You can't chase this thing higher. So it's the same deal. We got to wait for the pullback. Ideally, you're getting something like this, right? You pull back into the EMAs. Hopefully, you have like some support from the previous day. Now you're good to go, all right? This is like your quintessential play. I repeat, like today's going to be very, very tricky due to the size of the gap up in the market. Do not let the FOMO kick in. You're up 3%, 3.2% on the SPY. We got to wait for gap, pullbacks in all of these. And if you're really nimble, like super, like spirit fingers nimble, then you could try to fade the gap, hit the pullback, and then go. That's like a little bit next level. You would have to have really you'd have to have some dexterous fingers to do it. But that's the nature of the game. Let's talk about a couple other plays here. Oil seems to start to rebound here. Keep a couple oil stocks on your watch list here. I've got Oxy. Guys, bootcamp class starts tonight, by the way. 60-day bootcamp. We have class Sundays, Tuesdays, Wednesdays, Thursdays, 8 p.m. Eastern Time. Old bootcamp students, you guys are more than welcome, of course, to come in to as many classes as you want. You can retake bootcamp. Just hit me up. I'll make sure to get you the links and stuff. Tasty, did you change your name? Check this out. 1 test, 2 tests, 3 tests, 4 tests, 5 tests. This Oxy, that thing's tight. You know what I mean? You got a nice tight range. Now you're starting to break out of it in the pre-market. Oil is a little bit tricky though. You can't chase oil on strength. You got to let it pull back intraday. All right? Got to pull back intraday. This is a nice setup. I have a couple kind of things that I don't like about the setup though. Number one, oil stocks stink to trade. They just do. They've always been they've been shady to trade, but the setup is there. If you can hold over this trend line, you're going to have yourself a chance. I got a couple of these that are just on my list that are just flatlining here, that were down a lot. See this bad boy here? To me, these look like swing trades, all right? To me, these even look like swing trades. Like, you know, because you got a lot of room here. How I personally like to do these, like, you know, if you see a bunch of bottoming ones, you throw like a few hundred shares at 2 or 3 of them with, you know, tight stop. Man, a couple of them will hit for $5, $6, $7. Like, that's how oil runs typically go. So I like OKE, Oxy. You could go with CLR. CLR's got really nice tight range also on this bad boy. Chuck, that's a pretty good list. VRTX, VIR. Let me take a look at those in a sec. Yeah, OKE, Oxy. You can go CLR if you want as one more. All these have nice kind of big bases. If the market starts to run hot today, oftentimes what you'll start to see is what we call a sector rotation. Sector rotation means like there'll be a handful of names that have gone up so much as the market's been squeezing, then now you need to start running into other names that haven't moved at all. It's just a rotation. That's how it goes. So we got to go in definitely with these. I like both of these, all 3 of those oil names. Penn is one that looks like, this one used to be 40 bucks, got down to 3 bucks, now it's at 10 bucks. You can see here you got kind of a W pattern. If you can stay over the 20 SMA, I think this one's got a chance to get up to kind of 16, 17. The big thing with this one too, you can't chase it today. If you chase, you die today. Let these things pull back to the 9 or 20 EMA at the open, get a couple candles to hold, and then go. The daily chart on this looks really nice. You're starting to see the volume pattern start to shift around. It's going to have some good range on it. Let me see here. What are you guys watching? VRTX. Yeah, VRTX does got a nice breakout on it. It's been grinding up for a while. Broke the top of the Bollinger Band. I'm 50-50 on that one because it could just snap back a little bit now that it's broken the top. VIR, I would definitely 100% take off the list. The spread, I was, not because there's anything wrong with the chart. I was watching this bad boy yesterday. The spread on this stock, Chuckster, it's like incredible. The spread it's like $2-3 sometimes. It's been really tricky. PVH. Van Heusen, man. My dad used to rock Van Heusen shirts all the time when I was a kid from the outlet mall. Just for that alone, I would go with yes. Now look, this is another one of those that I think is going to be heavily shorted down the most. That's what I mean. These type of names. See, this thing was 110, got to 30. Big drop. The stocks that drop the most, they have the most room to pop, right? The dirtiest, filthiest names that get smoked when the market's nasty, those are the names that pop up the highest when the market starts to rebound. I like this. I hate retail stocks, as you guys know. It's like something must have happened in my childhood where retail stocks just burned me. I hate trading them. This thing looks hot. You see, you got a nice push, pull back to the V. It's a little bit of a grinder, but nothing wrong with that. That's a nice setup right there. Frankly, if it cruises over this could even turn into a swing trade. You've got room. You don't even have any damn resistance on this thing. Sorry for swearing. You don't even have any resistance on this thing to like 70 bucks. This is pretty cool. Good. Yeah, I was watching LVGO yesterday. You're right at a sweet spot on this, Jordan. Definitely, like this one, I would keep it on the list. To me, it's a little bit of a grinder because it's just been kind of grinding into that resistance. So you're just gonna like right in that resistance. Then you gapping out of it. I'd wait for a tap back and then see if you can shred it. Wait for a tap back and see if you can shred it. Market is, guys, I repeat, market's going to open up real hot. You cannot chase the gap up on a day two. Day two. Yesterday we gapped up big. This is day two. Don't get the FOMO at the open. Don't chase that gap up. Let the market pull back a little bit. Let the market pull back. Let the stocks pull back. Like, what are you going to do? Chase a fucking Tesla at $25? No, you can't. Right? You chase, you die. It's very, very tricky. If you didn't come in with anything, then you don't got nothing. You got to wait for the pullback. 9 or 20 EMA, you're good. J-Lo. Jordan Lopez. J-Lo, man, that's nice. I wish my name was Jordan Lopez. Just run around calling myself J-Lo. That's hot. That's hot. All right, Jordan, let this thing pull back a little bit. You're going to be go. You be good to go. Himat, what's going on? Himat, how you got like an Indian first name and a white man's last name? What's up with that? I gotta know. We're Club India over in the Bulls on Wall Street chat room. It's an Indian nightclub. You think it's a Bollywood disco in there? Yeah, Bollywood disco in the Bulls on Wall Street Discord room. Prognesh, yo, the shorting on TVIX has not been easy lately. I think because he's down too much. It hasn't been that easy lately. So we could short TVIX, UVXY, but the easy money is definitely over on the short on this, right? When we think about like room to run, like how much room do you run? How much room do you have to run? The easy money, I think, is over on this. They will bleed down. So, like any big intraday spikes, you can shred them for some day trades. But the volatility's decreased now. These things topped out a long time ago. The market bottomed out when these things topped out. A volatility blowout is often a sign of the market evening out. So, how much room do we have? How much room do we have? Not much, I think. Labu is nice. This is like a beautiful base breakout right here. It's nice. You got room to run. The key on Labu is going to be it's a 3x ETF. It's up 22% on 22%. What you're going to have to do on this is going to be a little bit tricky. You got to wait for a little bit of pullback. Yeah, you got to wait for a little bit of pullback on the boot camp. Not on boot camp. You got to have a little bit of pullback on the market because it's going to be crazy to try to chase this thing up. It's going to open up like 10%, 12%. Wait for a pullback to the EMAs, and then you're going to be good. All right? So, guys, let's have some fun. As always, if you're enjoying these, give me a thumbs up on the YouTubes. I got bootcamp class starting tonight. I better see you guys in there. Yes, bootcamp class starts tonight. It's going to be a heater. Obviously, 4 days a week, 2 months. By the time summer hits, you're going to have your trading beach bod going. Let's go have some fun. Let's make some money. As always, I'll be in the Discord room trading I'll be in the Discord room trading till I either get disgusted with myself or I make enough money or I can leave. Let's go do this. Let's go do this.